Hey everybody, this is Jim at SP500chart.com. It's after the close, about 4:30 p.m. here on the East Coast. We're going to take a quick look at the S&P 500 chart after I read this to you. The website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. I did that as quickly as I could. Hope you heard it. Okay, you're looking at a 30-minute chart today. We're just kind of hanging around up here, 1540-ish. Not quite able to convincingly get back into this red channel, but still having a target of roughly 1560 based upon this inverted head and shoulders pattern. Interesting to note that if you didn't see yesterday's video, I've put a couple little blue lines on here that I don't think they're going to live for very long, but it is looking like possibly a new little kind of accelerated channel coming up out of this inverted head and shoulders pattern. Now this is a small pattern. I made a mention that it's actually kind of hard to trade this pattern because the target is only a couple percent, 2.5% or so above the neckline. So it's not easy to make that into a profitable thing, especially when you gap up like we did earlier this week. So going forward, as we look at things, we've talked about flags flying at half-mast, and it could be that we're just going to go sideways until we go back up and get up to that 1560. And that wouldn't surprise me one bit. I was hoping for a pullback. I would have loved to have seen a pullback this morning. Not to be, folks. There's money getting thrown at this market. It's coming probably from just about every conceivable direction. And I know it's real tempting to want to jump on it, especially when you see the headlines that hype up things to tell you, wow, the markets. Of course, what's a little disingenuous, I think, is the headlines are saying stocks are at an all-time high. That's not true. The S&P is not at an all-time high. Good grief, look at the NASDAQ. Not anywhere near an all-time high. They're looking at the Dow Jones Industrials. They are at an all-time high. Congratulations. That's great. But it's a little disingenuous, I think, to make that blanket headline statement. And I wonder how many people are just kind of plowing in based upon that. That being the case, they are. So you can't fight them. But what you can do is you can look at it and you say, we know from past experience that markets don't go down until they've absorbed Joe Retail's money. And I think there's evidence that may be happening now. So I would just urge caution and have an eagle eye on this thing, because when we back out and we look at a 3-day chart of the S&P here, and if you can get over all of my markings that I've made and how I've cluttered this chart up, tell you what, I can get rid of a few things right here as I speak. When you look at this chart, you can see that it's getting less and less, and we're getting more and more constricted as we approach what could very well likely be very strong resistance for the S&P. As a matter of fact, if we put our little brown top line here and we draw a blue line that is defined by the March 2009 low, the October 2011 low, and really the lows of this past fall, it's interesting to note, for what it's worth, that the apex of those two lines falls almost exactly on the red line drawn over the 2000 and the 2007 market tops in the S&P. The moral of that story is, if you follow wedges a whole bunch, typically the apex of a wedge is a technically important area, and it typically points to what should be strong resistance. So guys, enjoy this upness while it lasts. Here you go. There's our inverse head and shoulders pattern. Here's our target just at the very top of the chart at about at about 1560. Here's our little 2-day consolidation. If this little guy breaks tomorrow, then this becomes a small, very small head and shoulders pattern on this chart that really would point no more than as a minimum target to probably tag this bottom line. So if you get a tag down here at 1530 something tomorrow, in your short termer, that might be a decent thing to do. But other than that, I think we look and we trust this chart for that 1560 target. So guys, that is the video for March 6, 2013. Thanks for taking that time out of your day to watch this. And I think the moral of the story is just watch. Just be open. I'm not saying there's a top yet, but I am saying things are starting to finally be in place. And I'm talking about psychology and other things. Even though your heart may say, no, this is great, I'll remind you that in 2000 things were great. In 2007 things were great. You don't get tops when things are bad. You get tops when things are great. So I would just say be careful, keep a watchful eye, and hopefully stick around with SP500chart.com so we can follow this together. Thanks.